Rand Merchant Bank, also known as RMB, has launched South Africa's first mid-cap exchange-traded fund, or ETF. It was listed on the Johannesburg Stock Exchange today. So joining me in studio for a closer look at that fund is Yusuf Wadi, who is head of exchange-traded funds at RMB. Hi, Yusuf.
Hi, Dan.
You're getting a bit of a second bite here because we reported on this 10 days, 2 weeks ago, and we thought it was launching then on the exchange. We were then told, no, we're announcing that it will be launching, but we didn't really talk about it in much detail, and you certainly weren't in for it. So let's start by saying why you've done this. It seems like a good idea, and why didn't someone do it before?
Sure. So I guess we can just go into what exactly this product is, right? So the RMB Midcap Exchange Traded Fund tracks the performance of the FTSE JSE Midcap Index. So in a nutshell, what that is, it's the 41st of the 100th biggest companies on the Johannesburg Stock Exchange in terms of market cap. So put another way, it's the biggest shares on the JSE that are not in the top 40. So it's actually the next 60. And why we're really excited about the Midcap Exchange Traded Fund is that if you look at the performance of the sector, the midcap sector over the last 5 years, the sector has actually returned 80% for the period ending July 2012. Now, if you compare that to the all share, which has only done 40%, there's quite a lot of healthy performance in the midcap sector, which we believe would be great value to investors out there, certainly.
So it's quite interesting because the smaller companies, the penny down from the penny stocks up to some small cap companies that may or may not offer some value, but some of them don't have a track record. Maybe they're too exposed to one sector, all their eggs in one basket. And at the other end of the scale, the top 40, the big fund managers are obsessed with those. But a lot of them are like big tankers. They move a little bit this way, they move a little bit that way. So it seems such an obvious thing to say. They're not small companies, the 41st to 100, but they are smaller. And perhaps there's much more volatility for investors in the good sense?
Well, that's an interesting point. You would think that the volatility would certainly be a lot more for the mid-cap sector as a whole. But the remarkable thing, once we had a closer look at the sector, is that over that period, the volatility was actually less than the top 40 or the all share. And there's probably various reasons why that is the case, but I think one that comes to mind is that if you look at the large cap sectors or the large cap indices, they certainly have a quite a substantial exposure to resources. Now the thing about that is that if you've got a bad set or negative set of macroeconomic indicators coming out of China or US or one of the developed countries, you tend to see a lot of volatility in resources and hence a lot of volatility in these large cap indices. Now, the mid-cap doesn't quite suffer from that problem because if you look at the mid-cap index, the exposure is certainly a lot more balanced. For instance, the biggest sector you've got in there is retailers at 10%. You then have listed property at 9%, healthcare at 7%, construction companies at 6%.
It almost could have been designed to be balanced.
Yeah, so it's a very in its construction, it's certainly a lot more balanced than, let's say, the large caps, indices. So,
who would the big boys of that sector be? Because Anglo and Billiton, for example, I don't know the stat, but it's a large proportion of the top 40, their market capitalization. Sure. And if you take a BAT with the biggest company on the stock exchange, so disproportionate. Who are the big boys, 3 or 4, that we would look at as the leaders of that mid-cap group?
And I think the point there with the mid-cap is I think because the index is so well constructed, you wouldn't have a bias to any one particular stock as you would in the top 40. If I just have a look at the list, you're looking at Life Healthcare big at about that's the biggest stock in the mid-cap at 4.9%. So it's not as big as, let's say, as you mentioned, the case would be in the top 40 for a big stock. So you've got Life Healthcare at 4.9%, you've got Foschini at 4.6%, you've got Mr. Price, you've got Spar, you've got AVI. These are all very exciting companies which I think a lot of investors probably don't have enough exposure to, which,
And because of the focus on the top 40, often driven by fund managers and professionals rather than smaller investors, we don't get to hear about them as much as we might. Let's just go back a step and remind us what an exchange-traded fund is, an ETF. They've become very fashionable. And how do people get into them?
Well, yeah, in a nutshell, an exchange-traded fund is simply in the way we've structured it, an exchange-traded fund is simply a listed unit trust. So it has all the benefits of a collective investment scheme. And what we do is we list it on the Johannesburg Stock Exchange in the form of an exchange-traded fund. What that actually brings to the product is that the client could buy it and sell it at any point in the day. There's a real-time price. There's a price at 9 o'clock in the morning and 9:05. So it's possible an investor could take a view on the midcap or any other exchange-traded fund now and then sell out half an hour later. So a lot more real-time dealing. The way an individual will get into this is possibly like any other share on the JSE through his online stockbroker or his stockbroker.
How accessible is it? Is there a minimum amount that you have to invest?
Well, the ETF actually listed today, and I think the price should be in the region of 51 rands. So that's 51 rand for one share. So pretty accessible. You know, 51 rand would actually be the minimum in terms of.
Yeah, we also sense that people want opportunities, because when the Altec started, I think it was 2003, 2004, it was the beginning of what turned out to be a long bull run. Lots of new companies listed. There was lots of excitement in investing in individual companies. Now, of course, those days have passed and the Altex has quietened down. A couple of the companies have gone to the main board. So it's in a way an excitement that we have a new option for smaller investors in particular, but bigger investors too. What a stock exchange wants, a securities exchange needs, is to continually refresh the opportunities, doesn't it?
No, that's right, certainly. And you know, so the Altex was certainly a different value proposition to the midcap. You know, the midcap is, you know, I think the smallest stock in there is Allied Electronics of about 2.7 billion, all the way up to the Life Healthcare of 35 billion. So it's certainly not, you know, it's certainly not an Altex type value proposition. So. But yeah, I think it's all about refreshing opportunities, and you know, I think where we see the opportunity for the midcap exchange traded fund is that together with the top 40 exchange traded fund or SWIX ETF or a few of the other large cap exchange traded funds, I think it's good product for investors to be able to build a holistic and well balanced, well-rounded portfolio that has exposure to both large caps and mid caps. So. Yeah, so I think there's a great opportunity in that regard.
What's in it for you? I mean, are there are fees that you take from it? You get your brand out there. Do you actually have to do anything? I mean, these are companies that run themselves, and you've packaged them together, and people buy them.
Well, there is a management fee that RMB charges for the product. The fee is 50 basis points management fee for retail investors. The fee does scale down to 20 basis points for institutional investors. And yeah, so I mean, we see it as providing value to our clients and our customers in terms of getting them exposure or providing them the opportunity to get exposure to a sector which we believe is core to their offering. And
we're now at 9:45 on the morning of the listing. No doubt you'll be keeping a very close eye on it today. Any sense of the early response?
A lot of interest. I think a lot of investors would just like to have a look at and see, you know, what the product looks and feels like on the exchange on the first couple of weeks. It certainly, well, it has listed at 100 million rands of assets under management. So, yeah, I think we're expecting some good things from this product.
Well, interesting new opportunity for investors on the JSE. That was Yusuf Wadi, who is head of exchange traded funds at RMB. Thanks, Yusuf.